One of the reasons why some people struggle with investing is that some of the golden rules are counterintuitive. Behaviours that serve us well in some areas of life produce negative outcomes in investing. R.P. Stevens points out several examples in his book, The Sloth Investor. One of them is that in investing, simplicity beats complexity.
It takes great skill, great learning to become an accomplished doctor or dentist and so on. But for me, this is what I find fascinating about investing. Sadly, too many people see investing as a numbers game, as a realm of life that is full of complexity, jargon, and I really want to hammer that point home. And I think I do in my book, the fact that a simple approach to investing really pays great dividends. And this is why the tagline, slogan, if you will, of my book is simplifying investing for all.
Another rule of sound investing that seems counterintuitive is that the less you pay to invest, the higher your net returns are likely to be in the long run.
In most realms of life, we think that if we pay more, we're going to get a superior service. So if I have a back problem, I know that if I see a specialist, if I pay a little bit more, I'm likely to get that little bit more of a superior service. And I think we're accustomed to that as consumers in our contemporary world. But the great thing about the style of investing that you and I advocate is that in terms of index funds, if you're paying low fees, that again is going to bring with it great reward.
A common misconception is that as investors, we need to be on the lookout for the latest opportunities. But no one has a crystal ball. So the rational strategy is what R.P. Stevens calls an own the world approach.
A globally diversified approach to investing is the way to go. Because while in some decades, North American equities are going to outperform, in other decades it might be the Far East. Who knows, it could be South America, very well be India. So I'm very much an advocate of a globally diversified approach to investing. Own everything.
Finally, investors often assume that they need to act often and act quickly. In fact, humans have an inbuilt bias towards action. In investing, it's far more sensible to take a long-term view and most of the time do nothing.
There's always geopolitical upheaval, there's always crisis in terms of oil and wars and so on and so forth. But there's so much evidence to show that investing through the thick and through the ups and downs of the stock market, you just have to hang on in there and remain inactive. Don't look at your investing app on a daily basis. Just stay the course, and that will bring with it great reward. I jokingly touch upon this in my book that investors need a set of earmuffs and a blindfold to kind of tune out the noise and not be deterred by the headlines.
So don't assume that the character traits that have served you well, say in your professional or business career, will help you as an investor. You may need a completely different approach to achieve the best results.